G'day everybody, John Seville from Acorn Wealth Corp, and this is your executive summary for stock setups for Friday, the 17th of April. Of course, Operation Option Expiration. Anyway, okay, so let's have a quick look. You can see that basically, again, we'll check over the Dow Jones Global Index as we've been doing over the last few summaries. You can see that the Dow Jones Global had that triple top and rallied straight through it and continued up. But you can see that over these last couple candles, Wednesday and Thursday, are now leading into Friday overseas. It's starting to top out, so we could be actually seeing a potential retracement back down. How big, we don't know. Could be just back to the support and then a rally again. But there are toppy signs that this leg of the rally is becoming a little overextended, and some type of a pullback may be necessary. If we have a look at the S&P 500, you'll start to see that we're heading into that same type of triple top as we go into tomorrow's markets. We're right there. Don't get confused by the Fibonacci. That's not the resistance. It's that trend line here. Okay, so we're right into that. But you can see that as we hit these equal highs, we are getting lower highs on the money flow. So that's a warning sign that the power is starting to wane in this rally. So just some caution signs. Now, of course, one thing to be aware of is that tomorrow is Options Expiration Friday. So that will set a new open range for the rest of the month of April. So open range was set back here on the first trading day of April, and we broke higher than that range, and so therefore we suggested the rest of the month up until options expiration would be bullish. That was correct. We have been bullish. So now the next option open range is tomorrow. So whether we break higher or lower than that range should dictate where we go for the rest of the month. Now we've had some awesome performance across the board on the stocks we've been trading this week. HQCL had a beautiful break today, up 11.39% from the entry criteria we had down around, I think it was 185 or 190, somewhere around there. So rallying strongly up into 227 today. And so we've seen performance across the board. And doing my scans this evening, what was interesting is that a lot of the stocks I found were actually shorts. So seeing as we've had probably about 15 or 20 longs in a row in the last little while, this will be a little bit of a flavor changer. So the first one is EAT, or Brinker International, and EAT. This looks like a drop down. If it breaks its support, which it looks like it will, we've got big divergence on the money flow. I think we'll see a drop down to this support level here, which you can see is right around where these moving averages are at 57.02. So I'd be looking for a drop, a break below 59.13, and I'd be looking at a target down here of 57.24. Or even just a little bit higher. Actually, look at the low of this candle. That's 57.24. So yeah, so basically the same price. So 15.24 would be my target, and the way I would be playing that, because there's not a lot of money in that in terms of a trade, I'd actually be looking at the options, and the options I'd be looking at, if you look at the $55 May puts, are actually only 55 cents currently, and the $60 puts are $2. So I'd be looking at taking a little bit of both. Now, why the $55 puts, you might ask? Well, if we come all the way down to this price, that's where I'd be taking profit on the $60 puts, but that would then complete a possible head and shoulders pattern, and if that were to occur, we could actually end up going quite a bit lower. In fact, we could end up going as much as a break all the way down to this $52 price level, which is kind of right around where this support was here, where we gapped down to. So that's my thoughts on that. But I would. It's a very speculative play, and whatever I put into those $55 puts, I would be would be risk capital. But there's a look at that. Okay. Now, the other reason why I'd be using puts is these guys do report April 21st, so not a lot of time to trade the stock, so that's why I'd be looking at options to control the risk. And if we get a big surprise to the downside, obviously those options could shoot up quite quickly. Okay, so the next one is GY. Now, there's some news going on with this stock due to some controversy regarding an exploding rocket ship. You can have a look into that, but basically there's been obviously a big drop in the price. There's been some smart money support here, but the money flow has definitely come out of the stock very quickly. So this is purely a technical stock play. The earnings aren't being reported in Yahoo Finance, but so that's why I think this is a potentially a good stock play or an option play. Now, if we break below this support level, below the $20.52 price, then this looks like a nice shot down to the 61.8 Fibonacci, just around $19. So I'd be looking here at $19.17. So that's a potential option play, however, from where we're currently at. So for the speculators in you out there, the $20 puts are currently priced at 35 cents. So a breakdown to that $19 level, especially if it were to happen relatively quickly, could be quite interesting. And of course, I'm talking about the May expiration puts. Okay, the next one is HVT. So HVT, this is kind of getting into the real estate play, looking at potential weakness in the real estate sector. These are obviously the furniture companies, and again, smart money support. This support level really hasn't been very impressive. No real bounce off of it, just a dead cat bounce, and we're coming back down. So I'd be wanting to see a breakdown of this one though, because even though this stock is very choppy, it's got the looks of kind of that bump and run formation. There's the channel, there's the spoon at the bottom. So this could just keep going up. And if for example, if you look at Groupon, for example, that same kind of bump and run formation starting to form there, which is bullish. So the same kind of thing on HVT. You can see this kind of the early beginnings of a bump and run. So I'd wait for this to break first, but if that were to break down below 22.31, I'd be looking at a drop down to 21.13, and I'd have a stop criteria at 22.87. So looking about $1, just basically about 5% potential on that one, I think. And HVT report 4th of May. AXL. This is a American Axle Manufacturing, and so looking at this, it's been on a very long sustained rally for quite a while, and this has started to break down, and you can see the volume kicked in from 858,000 to 2.42 million on the drop. So that's quite impressive. And in terms of the play here, I'd be looking at this as a break of 24.41, so it needs to break further down. Or the other thing I'd be looking at is a potential rally up. So the first entry would be a break of 24.41. But the potential better entry is actually if it rallies up to 24.90, and that's just kind of underneath where the high of this candle was at 24.99, and if you have a look at the hourly chart, you'll see this same kind of bump and run formation on the hourly. But if this is weak, it probably won't get all the way up to these levels. So if you're a day trader, you could watch this and see what happens as it interacts with this $25 price. And that would be, if it starts to reject, that's where I'd be getting in. Or it could rally all the way up here to 25.40, and that would be the top of the channel. So either of those offer kind of that reversal play. With this kind of short-term hourly bullish pattern within a daily bearish chart. And so yes, just to reiterate, that's the kind of the entry criteria I'd look for. So on AXL, we're looking for a break of 24.41 or a rally up to 24.90 and a stop criteria at 25.63. So break of 24.41 or a rally up to 24.90, or even as we said, as high as the 25.40 price, and looking at a stop at 25.63. Okay, moving on. DECK, also kind of an outdoors company. It's kind of in the home furnishings and renovations, so forth, things like that. Another breakdown play, and this is just purely and simply, it's a short-term play, looking at from a break of 71.17 down to 67.17, so $4 to the downside, or just over 5%. And I'd look at a stop at 73.17, so $2 of risk on the upside. So about a 2-to-1 risk-reward ratio, and so we'll see how that one pans out. And that's a DECK. Now, the other factor here on DECK is having a look at the potential optionability. Now, if we go back and have a look at the 2-year time frame, the first break we talked about from 71 down to 67 could be played by looking at just the stock, but if we look at the longer term potential on DECK, we can see that there's actually very substantial support here at 66. And if it were to break that, we could likely fill this 2-year long gap down to these previous prices of around $60. So the stock play from 71.17 to 67.17 gives about a 5% potential profit on the stock trade, but the next potential play could be from 65.45 down to 60. That would be the second leg of the journey that I would look at as a second potential trade. So I'd be looking to take profit on the first part and then look to re-enter if it got below 65.45. Now, if again, for the speculators out there, this could be something that you could play with an option. The $62, 62.50 May puts are at 25 cents. So the bid is currently at 10 cents and the ask is 30 cents, and the last transaction was at 25. So that could be interesting. They've got earnings at the 28th of May. So you could even look at going a little further out, but that could be an interesting options play. And the last short on the list is MHK, Mohawk Industries, and this is again a nice breakdown, very similar to a lot of the other stocks. And I'd be looking at this in a very similar way. I'm looking for a break of 175.45 with a stop at 180.24. Which is just above the hourly resistance. If you see this, I'll go into the chart. So you can see the low of this candle was at 180 and 1 cent. So $180.24 would be just a little bit above that key support level. And you can also see this is kind of a descending triangle. So once we actually break this level, the low of this candle, which is the 175.45 I'm talking about, this would also become resistance as it is. So that gives us a nice kind of level of margin on top of that. Now, in terms of a target, I'd be looking at 165 and 13 cents, and target 2 would be 160 and 17 cents. And that's because we're looking at the Fibonacci here, and then looking at the next Fibonacci coming in down here. But more significantly, what I was interested in when I looked at this stock was where the big volume came in, and you can see that that substantial volume came into this stock as it broke this horizontal resistance. So the Fibonacci's weren't as important as necessarily looking at that, and that's where the stock got through that 160 area, and bang, all the volume came in, and then jumped even higher the next day. So using volume to look for where the powerful levels of support or resistance could be is quite useful. Now on the long side, there's two stocks I felt would be useful to at least throw a couple longs out there. KCAP, this is a possible bump and run formation. We've got the channel, we've got the sharp drop, we've got the recovery, we've got volume building on the downside, and so this one looks like something that'll be have a potentially good run at from 596. So I'd be waiting for a break of 596 to head up to this resistance overhead, which you can see is going to be somewhere around here at 635. So we're basically looking from 596 to 635, and the stop criteria would be around 573. So there's not great risk reward here. There's only about 40 cents for of a reward for about 23 cents of risk. So it's just under 2 to 1, but they seem to have a fairly strong chart. Of course, if the market were to rally, the longs are going to offset any losses in shorts, and ideally your shorts should still drop even if the market goes up if you've got good shorts. But here's the play on this one, and they report on the 27th of May. Sorry, let me just have a quick look at that. Excuse me, it's an estimated release date of the 5th of May till the 11th of May. So just to be cautious of that. So that's the kind of way I'd be looking at playing that one. And the final one, I can't, of course, leave the executive summary without a flag formation. Now this is a stock that has been previously promoted. So like promotion emails where you say this is the top hot stock to buy, and like a lot of penny stock newsletters and promotional things, which are generally associated with pump and dumps. Now I don't know anything about the company or the chances of it being a pump and dump are, but obviously it's something that has got potential as a trading vehicle only. So this is the kind of thing I would trade with risk capital, and I'd much prefer to play something like this than the penny slots or a roulette table. A lot more fun and a lot more predictable. So what I did like is that this was promoted back in November, and you can see that what happened is it went up on 15 million shares, pulled back, and then flagged and went up another 20%. Pulled back and then went up again, straight up from $2.66 to $4.90. So when this thing goes, it really goes, and then it just dissipates into nothing. A couple 100,000 shares a day, kind of 100,000 shares a day, 80,000 shares a day, and then all of a sudden, bang, 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 yesterday 8.8 million. So looking at a potential replica of what happened last time is how I'm looking to play this. So it's going to take kind of an active trader's mindset to be on the ball with this. It looks like we're possibly forming a base here. The stock also has a short sale ban, so that no one can short this stock tomorrow until the end of the market. So in other words, until Monday's trading. So there won't be any new shorts on this company because there's a short sale restriction in effect. And Interactive Brokers reported that, and so this could have a nice little rally. And of course, it would be a short squeeze for anyone who's short it towards the top of the market today. And so I'm looking at this as purely a speculative flag play. I'm looking at an entry criteria kind of around where the price is currently. So looking at a break of 203. So looking at say 204, 205, and looking for that to run up to the first criteria of 227, where that yellow line is, and the second target is just underneath the second Fibonacci, or the 38.2. and so I'm looking at 267 as the second target there. So quite a lot to digest, but these are the markets where you want to really have a solid watch list, and of course that's what we're here for, is to find the possible setups you may be interested in. If you're not already a member of our executive summary, you can receive these alerts daily and also intraday when we report those by simply going to acornwealthcorp.com and requesting a trial of our services. That's acornwealthcorp.com, and we look forward to seeing you soon.